Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right, Monday.
Happy Monday.
Yep, the 23rd of February, brother. Things are moving right along, almost wrapping up February here. Got a lot of stuff going on. First thing I want to talk about with you is I know that Trump's got a new Fed chair that's coming in.
Coming
But
on soon.
everyone is like, oh, he's going to cut it a half a point. Mortgage rates are going to drop like crazy. I'm going to wait for that. So I want to address that. Okay. Because we talked about this before, but I don't think people quite understand what that means. First things first, mortgage rates are not tied to the Fed rate in any capacity.
In any capacity.
Mortgages are tied to the bond market.
Mm-hmm.
And when the Fed does a Fed cut, that Fed cut is designed to stimulate the economy.
Correct. Right.
When you stimulate the economy, more people are spending money. What do you think happens to inflation when more people are spending money?
Inflation goes up a little bit.
It goes up. And the arch enemy of the bond market is inflation. So when we drop the Fed rate, it oftentimes will have a knee-jerk reaction to mortgages and could cause them to go up. So Tom and I were in a big conference last week. I mean, incredible speakers there. And it was really interesting to see. And I wish I had this chart, but I'll tell you what it said. It had mortgage rates and it had a projection through the end of 2026. Right now, the average 30-year fixed is 6.05. Almost all the predictions, Fannie Mae, mortgage-backed securities, Zillow, I think Trulia, there was a couple other ones in there. They're all predicting that interest rates will stay flat or even go back up to 6.18. Now, I know 6.18 is not that much different than 6.05. But for all those people that are sitting on the fence and going, I'm going to wait for rates to drop to 5.5%, 4.75% before I refi or before I go out and buy, you are not going to get in the market.
That's right.
Not going to be good for you. So don't let the fake news dictate what you're going to do. You want to buy a house? I think now is a perfect time to buy a house. And we're starting to move out of that buyer's market back into more of a neutral market right now, too.
Yeah, I actually saw some data. I pulled up some data in research for one of my YouTube videos and comparing single family homes to condos and townhouses, right? In two different markets. And I didn't realize this, but I found out during that research that Lake Mary's single family home prices, where I live, have gone up 7% last year. Whereas Lake Nona's condo and townhouse prices went down 12%.
Yeah, but you're comparing your single family to their townhomes.
100%. Their single families are flat, okay? Because they went up a lot.
They jacked up. They were one of the highest in the country.
Right. We here in Lake Mary, we didn't get as high a jack up as they did, but they got a really big, right? So they've come down a little bit, probably more normalized. Lake Mary doesn't have much of a condo townhouse market. So just looking at single families here, we went up 7%. So if that's the data that you have, if you're thinking, oh, everything went down and got cheaper, you're wrong, because single families in good markets actually went up.
I agree. And I didn't know jack up was a financial term, but I'm going to start using it. I got another. So real quickly, if you're self-employed, you're probably paying more in taxes than you should. I'm bringing on a tax strategist expert that literally will challenge your CPA on things that you could take deductions on or ways to reduce your tax consequences. February the 25th from 6 to 7:15. It's Zoom. Go to webringyouhome.com and register. That's this Wednesday, the 25th from 6 to 7:15. If you're self-employed, you are welcome to join. It is a game changer. So this guy saved me tens of thousands of dollars in taxes that my CPA that I've had for 30 years just didn't pick up on. So
how much
I believe in my CPA, but there are ways to do it.
How much is this event?
It's not, it's nothing. I was going to do it, Tom, for just my elite self-employed and my current self-employed clients, but I've opened it up to everybody. I don't think it's going to be a big event because I haven't been, sending it out there and doing massive blast with it. It'll be small, but you'll be able to ask questions. And
Awesome.
it's believe me, this is the real deal. It's not a sales pitch. Nobody's trying to get you to sign up for anything. Just attend and you're going to get some value out of it.
That's awesome. So absolutely free, and I get to learn.
Yep. You get to
Awesome.
learn. Absolutely.
Awesome.
1 hour out of your time. You can sit there and eat dinner while you're doing it if you want to. Makes no difference to me.
Wednesday is poker night, but we don't start until 6:45. So maybe I'll get, because literally everybody at the poker table is a self-employed
Self-employed and they're all rich.
They're all self-employed. So I'm going to get everybody to get on this, and we'll get on it together.
Yeah, sure you will. All right. Next thing I got, we're going back to the tax elimination, trying to get rid of property taxes. There's all kinds of house bills out there and house joint resolution bills that are a little confusing for the average person. So I even heard on the, pardon me?
I said, they're confusing for me, and I keep up with it.
I know. I agree. I agree. And I have to tell you that if you really want to know more about them, then definitely check out Tom's YouTube page. Where do they go for that, Tom?
It's youtube.com, Florida Real Estate Insider.
Insider. There you go. Florida Real Estate Insider. A lot of great information there from Tom. Thank you for that. I've learned a lot from him. It's still confusing. Okay.
It is.
So we have HJR 201, which eliminates everything but non-school taxes, right? But school taxes, right?
Everything but school taxes, right?
That's correct. So that means, and that's only on homesteaded property, and they're just gone.
Only on homestead and only non-school taxes, right? So that's ballpark. That's if when they do that for the whole state, that's about $10 billion that needs to be replaced, or not, all right? Or they can cut, because the Doge audits are going around to these counties and cities, and they're finding a lot of waste, and they've already identified 2 billion just hitting 13 counties.
Yeah,
so there's 54 counties left. Now they did hit the biggest ones, right? So, the big ones are going to have the big numbers, and then the smaller counties are going to have smaller numbers, but there's 54 more counties, and there's 400 cities and towns.
Well, these counties are really self-monitored too. They're self-audited. They don't have outside auditors coming in to go, well, this is waste, that's waste. Tell me why you're spending money on, Egyptian frogs that are, whatever it is.
So the some of the bigger ones, the city of Jacksonville spent $75,000 to have a holographic mayor at the airport. 75 grand, right? I mean, come on. Do we really need a holographic mayor to greet people coming into Jacksonville, right?
They also have in Orlando, and he just uses his voice, and I hear that every time.
They have a I want to say it was a $7 million 1 mile stretch of sidewalk. I mean, just ridiculous stuff, right? The city of Orlando spent $70,000 on hot yoga, right? I mean,
I don't need my tax dollars spent on that.
Right. If those people want to have hot yoga, they can go down to
pay for it.
Day long. Yeah.
But I don't want to pay for your hot yoga.
That's right. I don't have. I have to pay for
or your hot pocket. I don't. It's not my job to pay for it. HJR 203. Now this one was very similar to 201. But it was a phase out. So it would be, you were going to, over a 10-year period of time, I think it was eliminating it by $25,000 more dollars.
It was $100,000 a year, every year for 10 years, and then total elimination after 10. It's interesting because it's basically the same bill as 201. It just had a phase out. They didn't pass 201 into the House yet. They passed 203, but on the floor, they amended it to immediate. So they basically nullified
201.
So they basically passed that. Now that is passed in the House, it still has to go to the Senate. The Senate is supposedly working on a bill, but they haven't identified it yet, and they haven't. There's no number, there's no data on it. But the Senate is currently discussing a bill, so we'll see. Because the whole process is the House comes up with a bill, the Senate comes up with a bill, they reconcile them. Hopefully, it's close enough. They go back and forth once or twice, and then they say, okay, this is what we're going to agree on, right? So it looks like we're heading towards what is halfway what DeSantis proposes, right? which is
Right.
non-school homestead home.
Right. And then we've got HJR 207, which
Yeah.
replaces the $50,000 exemption with 25% of your value.
Correct. That's right. Yeah. And I don't know if that one, again, that one's not passed by the House yet. I don't know if that proposal is for just the school or it's just the non-school or if it includes school. But essentially, instead of getting $50,000 of exemption, you would get 25% of your home's value. So $1 million property gets a $250,000 exemption and pays taxes on 750.
I don't think that's much different because when I see assessed value, it's usually about 80%. So what are you doing? You're getting a 5% more of a cut? I don't know.
Well, it all depends on
Unless
when
it's
the house is bought.
25%, it would be 25% of the assessed value. So
That's
that would
value, right?
reduce.
It all depends on when the house was bought, right? So if the house, if you bought a house 20 years ago for 50 grand, it only went up 3% every year. So it might be at 120 now, right?
Yeah,
But it might be worth, 250, right? So
absolutely.
I don't know what all that includes. I haven't really studied that one because it really hasn't gotten a lot of traction in
Let's
the
talk about House Bill 71.
So
Okay.
so
One
interestingly,
time,
I learned this recently. I did not know all this crap, right? So a HJR is a House Joint Resolution, right?
right?
So that's where the House says this is what we want to do, and that's going to go to the voters to vote on in the November election, right? So we get all these ballot initiatives, and we can decide what we want to do and not, right? So that's what an HJR does. And a House bill, it's like internal mechanism, right? So the House and then of course the Senate will vote on this,
But
and
we don't get to vote on it.
we don't get to, and we don't need to. It's just done. So this one is $1,000 rebate check for every homestead property. Cool, because it doesn't matter if you are a lower end homeowner with $100,000 home or Jeff Bezos with a $82 million home. Doesn't matter. You get 1,000 off.
I don't know if that's going to do anything for affordability. And if this is all about affordability, I don't think
I don't
that's
think it
gonna
is.
do it.
Here's the thing is it's two things. It's two, as far as I can tell, it's two things. One is it's a hey, we've taken a lot of your money, so here's some back, right? I don't have a problem with that necessarily. The other thing is the state has a balanced budget. I don't know what you call a resolution. It's in the Constitution, right? There's an amendment in the Constitution that says we have to balance the budget, and we can only have so much extra money. We've got $15 billion in the state coffers that are not identified for being spent, right? Cool to have a rainy day fund and we have money in case things go sideways and things go bad, but we can only have so much. So I think it's a little bit of a pressure relief. And what better thing to do than to give back to freaking people that pay in, right?
Yeah. Oh,
So
absolutely.
yeah, so I'm okay with that. It's a one-time thing, by the way. It's not like every year. It's not an ongoing. It's a hey, we've got a little extra. We're just going to give
I
people
tell
some.
you, I like the 201. I thought it was fair. It would not eliminate taxes completely, but it would cut them by 40 to 50%. So
Yep,
that actually is going to help affordability. And
I think so.
I look at this as why do it if it's not helping people more affordable? Now I get become more affordable. I get the fact that we feel like we are held hostage by our
Mhm.
property taxes and it is hurting a lot of people. But I think that if you just keep it simple, some of these could really, really work. The problem is that when I talk to people out there, they don't know where the money's going to come from. And when they
Right.
don't know where it's going to come from, they're not going to do anything.
Yeah, there's a lot of people that are saying specifically that. They're like, "Hey, that there's not going to be enough money." But, there's also a lot of groups out there, that are spending money on media telling people if this happens, the schools are going to get rotted, your roads are going to go bad, we're going to have to fire all the police. And all of that is in the bill that says they can't do that,
No, they can't do that. But
right?
we do have to have a reasonable understanding and explanation as to how we are going to fund them. You can't just cut a bunch of stuff out and go, now we'll go look for a way to fund it. I
Well,
think it needs to be resolved.
I agree mostly. The thing is that all these cities that have these excess budgets, right? They, if you look at a combination of new people moving in and inflation, right? let's say your taxes should have gone up 25% over the last couple of years, right? If they should have by those two factors, how many new people and how much inflation there is. They've not gone up by 25%. They've gone up by 40 and 50%, right?
Right.
And so like, where's all this extra money going? It's not going to the same things. It's going to new things. And what are these new things, right? And I think that's one of the issues that's what I have an issue with. Seminole County, where I live, they just passed recently a increased millage, and then they got audited, and the audit actually showed
they had surplus.
They had a surplus. They should have had a surplus, right? So it's like you came back and said, we don't have enough money. We got to raise millage rates. And then we found out you really not only didn't need to, but you could have given us money back. And that's a fiscally conservative county. Seminole County is not a spend happy county.
No.
And so, I don't know, man. I think the governments need to feel a little bit of pain like you and I do when we don't have enough revenue coming in.
There is no accountability for them. No. Well, listen, we've gone a little bit over. There's a lot of things. Just to recap, for self-employed people, I will be hosting and interviewing a gentleman by the name of Claudio Gambin, and he is a tax strategist expert, and he's unbelievable at identifying and understanding the market. And then, of course, we've talked about these house bills. We talked about the Fed possibly raising or lowering the rate. I've heard both stories. Okay. I just assume they leave it alone. And then I think it's important that people go to your website, check out all the information so you're a little bit more educated. And I know you and I don't have the answers. Okay.
No.
And there's still some unanswered questions that I have about these tax bills, but I highly recommend you check Tom McNamara out on YouTube. It's got a lot of great information. And thanks again, Tom. It's great. We covered a lot of things.
Thank you, Bruce.
Have
yourself a great week.